right, folks, let's just jump right in. We got Kevin Hassett, former chair of the Council of Economic Advisors during the Trump administration, distinguished fellow at the Hoover Institution and author of The Drift, Stopping America's Slide to Socialism, and Art Laffer, former Reagan advisor and Presidential Medal of Freedom recipient and author of Taxes Have Consequences. I will begin with my dear friend Kevin Hassett. We've kibitzed a little bit about this, but I'm going to put the Fed thing aside. There's no reason for the Fed to cut interest rates now. I don't know what the market was thinking. Look, more interestingly, maybe more importantly, from top to bottom, Federal Reserve economists, CBO, Wall Street Journal survey, Philadelphia Fed survey of professional forecasters, nobody got 2023 right, and nobody expected a 3% plus growth rate in the second half of 2023. This is after 550 basis points of interest rate hikes. This is after the Fed is pulling back on bank reserves and the monetary base and the money supply. We were supposed to have had either a big slowdown or a recession. Exactly the opposite happened. All right, I'm not even looking at this left versus right. This is something for the economics profession to sort through, Kevin Hassett, former CEA chair. I mean, everybody got it wrong. And by the way, I'll raise my hand. I said either a big slowdown or a recession. I was wrong. That's all there is to it. Now, Kevin, what the heck happens next?
Well, I'm thinking about what happened 30 years ago, because, you know, the problem with economics, right, is you look at the past data and then you assume that the data generating process for the past works going forward. But what happened 30 years ago, just about exactly 30 years ago, was Netscape introduced this web browser thing, and it was 1995, and the web browser thing made it so that the internet could suddenly revolutionize America. And what happened next was the economy kept surprising on the upside, but there were 5 years in a row where the average return on the S&P 500 was about 30%. And I'm beginning to think that the artificial intelligence revolution is going to have the same kind of impact that the internet did. And there's a really interesting interview by Eric Brynjolfsson, my colleague at Stanford, in the FT today, that talks about his estimate of productivity. And he says that he's the guy who knows this AI stuff the best. He thinks productivity might go up 3% a year over the next 5 years or so because of AI. And I think that could be what's going on. There's the surprising productivity from AI. And he has some specific case studies, I'll finish, where he shows that within a month or two of using AI, firms are seeing 10, 20% productivity increases. It's something I've not seen in my lifetime.
Well, you know, it's interesting. I'm going to give some credit where credit is due. I follow Ed Yardeni. I mean, I follow a lot of people. Ed Hyman's a very dear friend, Yardeni. But Yardeni really was in the soft landing camp or the no landing camp. And he does cite, I don't know if he probably talks about AI, but he does cite about a pickup in productivity. But Art Laffer, let me come to you. I don't think that would explain all of this incongruity that all the forecasters were wrong. Monetarists are wrong, Keynesians are wrong, Phillips curvers are wrong. You know, you had huge Fed tightening by any yardstick, and what happened? The economy got stronger, okay? 2023 was a very good year. 2022 was not a very good year. In fact, the first half of 22 were negative GDPs. So inflation comes down, the economy goes up, the Fed's tightening doesn't seem to have mattered, Arthur. What happens here? How are adjustments going to be made? Or maybe nobody should listen to economic forecasters anymore.
Well, I'd rather watch a weatherman myself, Larry. But seriously, before you get into the balloons, the streamers, and the party horns, I mean, this economy is not a great economy. It really isn't. Yes, we had nice growth this last year. Yes, inflation did come down. But the stock market today is at the same level in real terms as it was in March of 21. The participation rate is 62.5%, which is really, really low. I mean, it was like 67% when Clinton left office. Our GDP growth is not caught up to what it was pre-pandemic. And the worst one of all, life expectancy, is down about 3 years, which is really bad when you're 83 like I am. I mean, I really count on that life expectancy not going down. I want it up. But, I mean, look, this economy is not in good shape. It really isn't. The only thing that's really doing well is immigration, and it's hitting new highs every day. I mean, we must be attracting people really well with our economy. No, seriously, this is not a great economy. 3.1% growth, given the pandemic and given what had happened, is not great. Now, I don't do the forecasting like you guys do, and I probably would be worse than any of you. But it's really a secular problem we have here in the U.S., and that secular problem is not improving. And that's why everyone, and I mean literally everyone, look at median household income if you want to see something terrible.
Well, let me raise
what
that.
you guys did in the Trump administration, it went way up and then came way back down again.
Yeah, let me raise, I mean, it isn't, look, there is still an affordability crisis. We looked at it again. Real average weekly earnings since Biden's been president, down 4.5%, actually fallen 4.5%, a little more, I think 4.6%. Yes. TIP, which is the most accurate poll, Issues and Insights TIP poll, let's see, nearly 2/3 of people say they live paycheck to paycheck, okay? Below $70,000, 68%, even making more than $70,000. Let's see, 44% either have zero or less than $1,000 in their bank account. In other words, nobody's got anything in the way of emergency savings. So they live in paycheck to paycheck. 24% have zero in the bank. And, of course, real wages are falling. So I know it's not great. But, you know, Kevin Hassett, I do think the economics profession, we're going to get John Taylor on, one of the deans of the profession. The profession needs to look in the mirror and figure it out. I mean, there has to be an explanation. And I'm not being partisan. I know lefty bloggers are on my case because I thought the economy would be sluggish or recession. And then I admitted that it was strong, and they got on my case for admitting it. I don't care. I'm a business host. But the fact of the matter is, I'm not interested in left versus right. I'm interested, Kevin, in, you know, the last few seconds here, what went wrong?
Right. Well, I think that what happened, 30 years ago was that we had all this data where there wasn't an internet, and then all of a sudden we kept getting surprised on the upside. I agree with Art that there's a lot of bad-looking data out there, but I think that we're going to keep getting surprised on the upside because the productivity boom that Eric Bridgelson sees coming is starting to be palpable in the data, and that's what I think it is.
We'll leave it there. Pray for productivity. No problem.